Hello everyone, this is Paul from the APNacademy, and in today's video we're going to be looking at support and resistance, or what we simply call area of demand and supply. Now, you can use any name that you want to use, but some people tend to think these are two different things, or these are two different aspects, right? But they are the same, guys. Do not complicate things. The reason why things are trading is becoming hard for most people is because they want to complicate terms. They want to make things look complicated or hard, right? These things are very simple. So we're going to first start by understanding what support and resistance areas are, or what support and resistance levels are, or what you can simply call demand and supply. Now, let's start by defining them. Let's start with support. Now, what is support? Support is simply a level that is below current price, where we expect, just mark that word, where we expect buyers to come into the market. The word expecting means that they may come or they may not come. What do I mean by that? Buyers may either come or sellers may continue to be strong in the market. Let me just try to illustrate that for you people. We are saying that support is a level that is below current price. Let me just use a graph like this. Don't worry, we're just first doing theory and we go to the charts later for the practicals. Just let's first understand the theory part. Now, let me use this. If this is my current price, I will abbreviate it as CPX, current price. We are saying that support is a level that is below, right? We're going to learn how to come up with this level. Actually, it's why we are making the video, or why we're having the video. We're going to learn how to draw this level. So we are saying it's this level below here, below current price, where we expect buyers to come into the market. So what do we mean by that? We mean that if the price is moving down, right, and approaches this level here, we expect buyers to come. Why are we saying expect and not buyers must come into the market? Because sellers can break this level and we continue moving down. Are we together? Let me just repeat that. We are saying expect because buyers may fail to hold this price to push it up at this level here, and instead sellers have more force and push through to continue moving down. So this level below current price is what we call support. And just in a layman's language, for those who are still getting confused, support in a layman's language means to hold something, to help. That's why it is a level that is below. It is helping. It's supposed to hold price. It's supposed to protect price from falling. That's why it's called support, right? That's why let's say if you're helping someone, you're giving food, you call it support because you're holding someone's hand into doing something. You're helping someone to go through a situation. It's called support. Even in the market, we have that level that's supposed to hold price from falling. So that is how we define support. Now let's just go to resistance. And resistance is just the opposite of support. Resistance is simply an area that is above current price, where we expect sellers to come into the market. It's just the opposite, right? It's just the opposite of support. Now let me just also illustrate it here. Let's assume this is our current price. I'll abbreviate it as CPX, current price. And we have a level or an area above here. I'll just shade it. We expect when the price is moving up and approaches this level, we expect sellers will push the price down. But we are saying expect because it's not a must, guys. It is not a must because buyers may continue to be strong. Hope we're following. But by definition, we are saying that we expect, depending on the conditions that we follow, or the conditions that we're going to be looking at, if they are fulfilled, we shall expect sellers to come into the market. Our job, or your work, or your duty as a trader is just to mark or identify that level and wait. That's why they say trading is all about patience, and is the hardest thing, right? Being patient is one of the key things that a trader can have, or can practice, or can learn to endure, because everything is about waiting. Actually, it's said that the technique, or what we are learning, it just takes up about 5 to 10%. The rest is in your mind. right? So now this is how we define support and resistance. I hope I've tried to simplify it. Resistance simply is holding something from going beyond. It's like fighting back. Now, if you look at where resistance is, remember support is down here. Support, we said, is helping, it's holding. While resistance is, it's like confining, it's preventing something from going beyond. That's how the name comes about. Now, why is it called, someone may be asking, but you've said it is called areas of also demand and supply. Now, those who have done economics, we clearly know that, just create some space here so that I can illustrate for you. Those who have done economics, we clearly know that demand, buyers want to buy when prices are low, right? Let's say if this is your price and this is your quantity. People, the more quantities, let's say 1,000 kilograms of something, let's say it's rice or sugar, will be bought by very many, sorry, will be bought cheaply. If this is price, let's say at $100, right? At $100, many kilograms will be bought. But if price is at let's say $1,000, you'll find out that we're just selling 80 kilograms. This is just in normal life. When something's expensive, it's only those commodities or those items that cannot be foregone. Let's assume, let's just imagine oxygen was being sold. However expensive it would be, people would buy, because without oxygen, you cannot live. So there are some commodities that even if they become expensive, people will continue using them. I'll give an example of what is happening. Oil. However much oil becomes expensive, people will continue to buy. People, even if people rebel, but they will continue to buy, however expensive it is, right? Subsidies may come in, but people will buy at whatever price, because oil contributes a lot to the economies of the world. Now, why do we call this resistance and support also areas of demand and supply? Now, just from this example I've given you, we expect that at lower prices, buyers are coming in, because remember the level below was the level that was down, that is holding support. That level below, we called it support. Now here, the level below, which is the cheaper price, is where buyers are coming in. Are you getting it? The price that is down here is where buyers are coming in, while the price that is above, the expensive price, is where people who have commodities want to sell. For example, when you go to the shop, let me give you an example. When you go to a shop, you go to a mall, wherever you buy from, either you've gone to buy a gadget or you've gone to buy something to eat. The person who is selling will be happy if you bought at a higher price, while you who is buying will be happy if you bought at a cheaper price. Are we getting the logic? That's why we call support and resistance just same as demand and supply. Now, demand is this level below, which is support. This is the same as demand. Because at support, buyers want to buy cheaply. Here, the product or the produce is cheap. But at resistance, it's expensive, and sellers want to sell expensively. I hope I make sense. That's why we call it demand and supply. I hope I've justified that. So do not start confusing the two, that they're different, or they are simply the same. However much someone tries to entice or make them sound different, or they're the same. Do not get confused. So having understood what support and resistance, how we define it and what it is, now let's go on to the next thing that I want us to look at today. Now, the next one is the categories of support and resistance and their uses. Now, support and resistance are categorized into two, right? The first one, the very first one, is the category of the measures. We have measure, support, and resistance. Now, what makes them measure? These support levels or support areas are drawn in bigger time frames. Now, what we call bigger time frames? The bigger time frames are the time frames of analysis. Are we following? The time frame you're doing in analysis is what you call a bigger time frame or a major time frame. You can call it bigger time frame or major time frame. Let me just repeat that one more time. The time frame in which you're doing analysis is your bigger time frame. For example, swingers will do their analysis or will get their structures from weekly, let's say. Now, this is their time frame. This is their bigger time frame of analysis, meaning that a swinger will draw his or her support levels or his or her demand and supply levels in the weekly time frame, because this is the time frame which they're doing their analysis. Are we following? Let me just repeat that. A swinger will draw his or her support and resistance levels or demand and supply levels in the weekly time frame, because that's where he's doing analysis from, and that makes it the major, his or her major level of support and resistance, because he has drawn it in a bigger time frame. Hope we're following. Then the second category is the minor time frames. Sorry, the minor support and resistance category. Let me just clear this. The first one was major support and resistances. Then the second one is minor support and resistance. Now, this category involves a trader drawing the levels in minor time frames. We can call them minor time frames or small time frames. Now, what are the minor time frames? What are the time frames that we're referring to as minor or small time frames? These are the time frames in which you take your entries. Either you take your entries or you refine. Those who do not understand these meanings, there is just a video I'm going to attach. I'm going to attach in the description. Make sure you watch it in case you're not understanding these terms. There's a video we made on the uses of different time frames. It explains this, the entry time frames, the analysis time frames, and all that. So if you don't understand this, make sure you watch the video I'm going to attach in the description. It will be of good use to you. Now, the minor time frames are the time frames where you're taking your entries from or you're refining your trades from. Refining we mean that after identifying your entry time frame, you need to refine your trades to have a better risk to reward ratio. Most times people take trades either too late or too early and tends to cost them. So to avoid that, you have to make sure you refine your trades always, right? So if you draw your support and resistance levels in entry timeframes, they are called minor support and resistance levels, or you call them minor demand and supply levels. So these are the two categories of support and resistance, and also you've looked at their uses. The one in major timeframes, we are using them for analysis, and this analysis in the analysis timeframes are giving us our area of interest. Sorry, let me just clear this. Sorry. The analysis timeframes, or the major support and resistance levels we're drawing in analysis timeframes, are giving us what we call area of interest, or what you would like to call area of value. Now, area of interest gives you the area in which you're going to pick, like the trade or the analysis is going to pick your attention. Most traders do not know how to have a watch list or what they would like to trade. These timeframes or these analysis timeframes, whatever you draw there or whatever you mark in those timeframes, are giving you area of interest. Let me just give you an example. When you go to a shop and you want to buy a t-shirt, let's say, you want to buy a t-shirt or whatever cloth that you've liked, the first thing that will make you go even to that shop is you've picked interest in having a new shirt or a new cloth. Without having that interest, or without seeing what you've liked from that shop that is selling the clothes, without seeing the piece of cloth that you've liked, you will not go there. So what is making you go to that shop in the first place is you've picked interest. So the same applies in the markets. Before you say that I'm going to buy Euro USD, or I'm deciding to buy this, my rules have come up and all that, before even getting to the rules or getting down to decide to say that this pair or this commodity or this currency, this cryptocurrency or this stock is going to go up, you have to first pick interest in it. It has to first come into your level of interest or your area of interest. Some people call it area of value. Are we together? So that's the use of the support and resistance levels or demand and supply area that you're drawing in analysis timeframes or the big timeframes, the major timeframes. Remember, we called them major, support, and resistance. Now, in the minors, these ones are giving what we call area of entry. After identifying the area of value, we are going to look for, in the area of value, we are looking for change of trend, and we're looking for the market or the price to change trend. While the ones we are drawing, the resistance and support levels we're drawing in the minor time frames or the small time frames are giving us our the areas of entry. Are we together? Now, the area of entry, you're simply going to use it to refine and then you enter your trades. Guys, these two things are different. Let me just repeat them once again. The support and resistance levels you're drawing in the big time frames, or what we call major time frames, are called major support and resistance levels or major supply and demand areas. And we draw them. Why we call them majors is because we're drawing them in the major timeframes. And which are the major timeframes? The analysis timeframes. And we have said, what are the uses of those support and resistance areas that we are drawing in those big timeframes? They are giving us area of interest. Area of interest is when the price reaches in that area, you're expecting it to do what you want. If it is at, we are going to look at it on the chart. If, just like we have defined, if the price is below, if the current price is below that area, let's say this is the area. If the current price is here, this is your resistance. This becomes resistance. If the current price is above, this becomes your support. So it's giving you area of interest. And we know that at support, we want to buy. At resistance, we'd like to sell. But of course, we do not just sell because there are certain things that we have to look out for. So it gives us area of interest, or what you guys call area of value. Then the minor ones, the minor support and resistance, or the minor supply and demand areas, we draw them in the minor timeframes or the small timeframes. And these timeframes are the entry timeframes or the refining timeframes. Which are the entry timeframes? We talked about them, the hourlies and then the minutes. While the major timeframes are the analysis timeframes. It can be weekly, it can be daily. And we said monthly is strictly for direction. If you have not watched that video or you don't know all the uses of the timeframes, make sure you watch that video in the description. Now, that's all about the categories of support and resistance plus the uses. In case you have not understood or you're lost, do not hesitate to ask in the comment section, or you can even contact us and ask questions. We shall be able to get back to you. Now, let's go down to the next one. The next thing that I want us to talk about are the types of support and resistance. Now, we do have also two types of support and resistance. The first one is horizontal, which we're going to talk about today, the horizontal support and resistance. Then the second one is the diagonal support and resistance. Now, the diagonal support and resistance is what we call the trend lines. Now, this one we're going to talk about it in a different video. So these trend lines. Sorry, I've written badly. Trend lines. Now, these trend lines are also support and resistance, but people tend not to understand that or tend to get that, because if a trend line is below and it's holding price, it means it is support, isn't it? When it's above and it's holding price, it means it is resistance. So the trend lines are actually support and resistance areas, but just that they're diagonal. They're drawn using diagonal lines, right? While the horizontal ones, which most people term as the support and resistance, yes, they're also support and resistance, but just that we draw them using horizontal lines, right? Or we can also draw them using slabs or the rectangles, the tools of rectangles on your charting tools or your analysis tools like the trading view and the MetaTraders or CTrader, whatever platform you're using. Now, these are the types of support and resistance that we do have. You can use horizontal or you can use diagonal, but today we're focusing majorly on the horizontal one. The diagonal one, we shall talk about it in a different video. So let's continue to the next thing. Now, the next one I want us to talk about is, the question can arise all the time, or people are always asking, what's the best time frame for me to draw my support and resistance? I've just explained that above. The best time frame to draw your support and resistance is the time frame you're comfortable with, or the time frame you use to either enter trades, or the time frame you use to do analysis. Now, if you do analysis in weekly, remember, you have to choose the following. You have to have analysis time frame, the time frame used for analysis. That's one. Then two, you need to have the entry time frame. Then three, you need to have the refining time frame, right? These three, you must have them when you're talking about time frame. So if you're talking about which time frame is the best, or which time frame suits drawing support and resistance, you can draw them in these time frames of yours. For example, if you're a swinger like I am, you will use weekly to get your majors, and then you use, let's say, your hourlies to get your minors, right? So the best time frame depends on what you're comfortable with as a trader, or what type of trader you are. It depends on that. So those are the time frames that you're going to be using to draw your majors or to identify your majors. We're just going to look at it on the chart, right? So if you have that question in your mind, I hope I've answered it, right? So let's continue to the next one. Now, the last one is the tools and charts to draw the support and resistance. Now, let's start with the tools. What tools do we use to draw this support and resistance? The first one is the horizontal line, which I already mentioned. Then the second one is the slab, or what you call the rectangle. These are all there on your charting tools, on your charting platforms like the TradingView, or the CTrader, or if you use the MetaTraders. It can be MetaTrader 4 or MetaTrader 5, they're all there. So we are going to use horizontal lines or the slabs. For the diagonals, we have said we're not doing it today, but if we're doing diagonals, we'll be using diagonal lines, but we're not doing it today because this is a topic of its own. It's a different topic. So we are going to differentiate it from this one. We're going to split the two. So these are the tools that you use. Now, let's come to the charts. Guys, pay attention here. This is very, very important. If you would like to use a horizontal line to draw your support and resistance levels, or your demand and supply levels, you have to make sure you're using the line chart. Are we together? Let me repeat that. If you're planning to use the horizontal line to draw your support and resistance levels, make sure you're using the line chart. Now, why the line chart? Because we're interested in identifying either opening prices or closing prices. We say that this is the type of chart that enables us to make decisions, because it only plots out the way price closed. Are we together? We make decisions depending on how price opened or closed. Personally, I prefer using how price closed, because it will be telling me the patterns that have been created. Is there a breakout or not? But also some people are comfortable plotting the line chart depending on how price opened, right? The good thing is that the charting tools or the analysis tools or platforms enable you to set the line chart. Personally, I advise you to use the closure, because it's best to make decision after the candle has closed. You will know that this candlestick pattern is telling me this, or the way this candle has closed, it has broken, or it has failed to break, or there are rejections. How do you determine all that? Because of how price is closing. So I advise or recommend that you use, or you set your line charts to how price has closed. Now, let's come to the slabs or rectangles. You have to use what we call the candlestick chart, right? The candlestick chart. If you want to use a slab or rectangle, make sure you're drawing using the candlestick chart. What do I mean by, why do I advise candlestick chart? Because, let me just write it properly. For those who are noting down candlestick, the candlestick chart. Now, why the candlestick chart? Because the slab is marking for you an area. And the line, remember, the line is just a line. It's plotting out either opening prices or closing prices. So it's not going to give you an area. While the slab, most traders don't know this. Most traders don't know this, but we're using this slab so that we're able to mark an area. Remember, we say that it's either a level or an area. So the level is drawn using the horizontal. This one gives you the level. But the area is given to you by the slab or the rectangle tool. Are we together? So these are the tools and charts that we're going to be using to draw our support and resistance, right? But let me just, before we go to the charts, I would just like to show you theoretically how we draw support and resistance. So the first thing you do when you open your chart, no matter the time frame, when you open your chart, whether you're doing majors or minors, remember we've talked about major support and resistance and minor support and resistance. So the first thing when you do, when you open your charts, right? Go to your time frame of analysis. We start with the time frame of analysis. Why do we start with the time frame of analysis? We start with the time frame of analysis because we would like to find the area of interest. After the analysis time frame, then you will come to your area of entry to mark the minors. Remember here we said we get the major support and resistance. Here we get the minor support and resistance. So what are we looking for here? We're looking for the area of entry. Are we together? We're looking for area of entry. Here we're looking for area of interest, and we get it from the analysis timeframes. Analysis timeframes, what do we have in analysis timeframes? We have monthly, we have weekly, we have daily. So if you do analysis from any of these timeframes, this is where you're going to get from your area of interest. And after that, you come to your entry time frame also. If you use the entry time frames, we have the hourly time frames and the minute time frames, but the minute ones are for refining, though they're under the entry time frame. So we have the hourlies, it can be H4, it can be H1. Then you also draw your minor support and resistances or demand and supply levels. So how do you identify that this is a support or resistance? Remember from the definition, simply support is an area below current price where we expect buyers to come in. And resistance is an area above, an area or level above current price where we expect sellers to come in. The major or keyword there is expect. It means that it may happen or not happen. So remember, let's start with the uptrend. When the market is moving up, it's going to turn from here. It's going to create a high, then turn down and create a turning point here to go back up. Now, these turning points here are the ones that we're interested in, and they're the ones we are going to mark. Remember, we say that we use two ways to draw support and resistance. One, you can use your horizontal line, or you can use your slab, or what we call a rectangle. These are objects or shapes on your analysis platforms. It can be MetaTrader or TradingView. So this turning point here is what we are going to use. The moment the price, any point the price turns from, that is a key area. This turning point is telling you that in this area here, there is a presence of either buyers or sellers. The moment the market turned from here, this high place here, it indicated that sellers pushed the price down. And when the price turned from here, it indicated that there is a presence of buyers in this area. So these are areas that we are going to mark. Now, simply, since price is here, let's assume this is your current price. Since price is here, an area above current price where we expect sellers to come in is this one here. Because previously, sellers came in at this point here. I hope I'm making sense. Do not go. I've seen people saying that you should go and look at areas that have been touched multiple times and all that. That is not true because you're going to have multiple lines. Just look for the immediate turning point in your analysis time frame. Your chart is going to be very simple and clean. But if you say that you're going to look for turning points of, let's say this was some months back, the market came down, then the market is moving like this. Remember, these turning points here are going to be reacted on when the market reaches them. So when there's a breakout or retest, it's reacting on that same point. when even the market is going back, it's going to react to that same point. So there is no point of looking for very, very old turning points. Are we together? All levels that the price touched or market touched. Do not look so far. Just look at the immediate movement, and most preferably the one on just the immediate movement on your left. What do I mean by immediate movement on your left? Let's say the market was going up, down, up, down, up, down, and then it changes trend. Just consider these things, this current movement on your left. When the price breaks this level here and is below it, this is your resistance. And the next turning point here will be your support. Do not go and look for old turning points. Just consider the immediate movement on your left. We're going to do this on the chart, but I want you to first understand it theoretically. Now, this would be your support, this would be your resistance, or this would be your level of supply, and this would be your level of demand, because it was a previous turning point which was broken. Now price is above it, meaning that we expect buyers, presence of buyers to come here. And when it reaches here, since the price is below this level up here, when it reaches here, we expect sellers to come into the market. Why is it like that? It's like that because once support is broken, here it was resistance, but the moment it was broken, it became support. And when it was again broken below, it becomes resistance, just from the definition. The definition, we simplify it and say that an area or level above current price is resistance. An area or level below current price is support. So the same applies here. Let's just come back down here. Let's just come back down here. This turning point here now is your resistance. Now, in an uptrend, we expect the market to be making higher highs and higher lows, higher highs and higher lows, to show that the market is continuing up. While in downtrend, we expect the market to be making lower lows, lower high, lower low, lower high, like that. Now here, we expect, of course, the market, it will reach here and react a bit, but we expect the market to break and create a new high. Now, this high, we're going to call it higher high. I'm going to abbreviate it as HH. Why is it a higher high? Because it is higher than this previous level here. So this communicates, or it's telling you that the market is moving up. Now, the moment the market crosses here and it starts coming back down, remember the rules of breakouts. We're going to talk about it in a different video. After breakout, we expect a retest and should behave in a certain way. Now, when the market is coming back down, this automatically becomes your new resistance. While remember what we've just mentioned, the moment resistance is broken, this level becomes below current price. So if current price is here, this level is below here, so it becomes your new support. Just a small recap. Once resistance is broken, it becomes support. Once support is broken, it becomes resistance. Are we together? Just from the definition. If it is confusing, you use the definition, or you can just draw, this is your current price. Any level above here is resistance. Any level below here is support. So when this support is broken and current price goes below here, current price becomes, this support becomes resistance. Are we together? The same applies here. Once this resistance is broken and becomes below, the current price is here, it becomes support. Hope it is clear. So this is your new support, and that. So the sequence continues. We create a new high. This becomes a higher high. You mark this turning point. Remember what I was using to mark? We're using either a rectangle or what we call a slab, or you're using your horizontal line. And just a reminder, where do we use the horizontal line from? Which chart? Those who have been following. The horizontal line, we use the horizontal line in the line chart, right? And where do we draw the slabs from, or what the slab or rectangle? We draw this from the candlestick. We draw it from the candlestick, sorry. Let me just clear this and write properly. We draw it from the candlestick chart. Do not forget this, right? I'm going to show you on the chart how easy it is, just using immediate turning points. Open your chart, start with your analysis timeframes, mark the majors first. After marking the majors, then mark the minors. We use the minors in entry timeframes because those are the levels at which we're interested in taking trades at. While the majors in the analysis timeframes are giving us area of interest. Area of interest is telling us that in this area, I expect something to form for the trade to either move up or to move down, right? So without wasting time, let's just go to the chart, and then we see how how we draw them practically. Now, this is my chart. We'll start with an example of gold, right? I'm using TradingView. It doesn't matter. Some people are not comfortable with TradingView. Some people are comfortable with the MetaTraders and all that. Use the platform that you're comfortable with. So here, let's use an example of gold. Now, I'm assuming that you do intraday and you want to draw your support and resistance. Please, just like we mentioned, there are very many turning points on this chart. But to make your chart look simple, I'm just going to use this movement down here, right? I'm just going to use this movement and see how you can draw your support and resistance when your chart is very clean. So let's start with the line charts. Let's just change our chart to the line chart. Now, the highest point that the market reached was here, and the market turned to come down. It created a turning point here, right? Then made this low here. Just something I forgot to mention is, in an uptrend, you're interested in marking higher highs, while in a downtrend, you should mark lower lows. This one is not told to you guys. This one is not told to you guys, but you should take it from me, right? It will make it easier for you. Instead of saying that, now which turning point do I mark? Which turning point do I mark? In an uptrend, we're interested in marking higher highs, while in a downtrend, we're marking lower lows, right? So this is the highest turning point that the market made, the higher high, right? Now, when the market changed trend and created this low here, it becomes our other turning point. And then also we have this low here. Remember, in a downtrend, since the market is going down, in a downtrend, we're interested in the lower lows, right? So we're just going to mark the lower lows and we see how price reacted on those turning points, right? So let's just bring out our lines. This is my horizontal. So I'm going to mark this highest point here. I think this highest point here. And then also let's mark this low here that the market made since it's a downtrend. Then let's also mark this low here that the market made. Let's also mark this turning point here because it is a low, this low here. Let's also mark this low because it is a low. And let's also mark this low here, right? And let us also mark this low here. And let also mark this low here. Now we have marked all our lows. I'm just marking all of, you don't need all of this. I'm just trying to show you as an example here in this move down. But I do not need to mark all of them. If I'm going to trade, I just need to mark the immediate ones here. And remember, we said we just draw using things, the movement on your left. Now, if you want to trade, to take trades on this move that is currently happening, you're going to base on this left here. But the reason why I'm marking all of them from up here is just to show you how accurate the line chart is and how you've been ignoring it. It is very, very important in your trading. It can take your whole analysis game to a different level, right? So now let's go back to candlesticks and we see how price was acting. Just check how price was acting here. Are you seeing this? Are you seeing this? And price came back. It turned from here, played, but we knew that we had to go back and retest a level that we had not tested. When we broke down, we knew that we had to come and retest. When we broke down here, we knew that we had to retest here. We're making lows, lower lows, and lower highs, lower lows and lower highs. Now, the reason why I said that you don't need to draw all these old things is check how price is acting. The market made a low, created double bottoms here. And then the market broke above. What did it do? It just retested the previous level it had broken, which is this line here. Now, the price has been held by the previous turning point. Why is it being held here? Because it is a previous turning point, right? So you have to base on the immediate movement on your left when you're drawing support and resistance, right? But like I've mentioned, you don't need all these lines because it will make your chart dirty. Now, that is for people who want to use horizontal lines. Now, for those who would like to use, let me just clear all these drawings. For those who would like to use slabs or rectangles, by slab, I mean this tool here, this kind of rectangle here, right? So for those who would like to use rectangles, you use candles and we are drawing on wicks, right? So I'm just going to draw on this movement down here and then we see how we would have drawn it. Now, the condition here is you're only drawing using the wicks and do not cut the candlestick body. Let it only be the candlestick that is breaking to cut that slab. But the point you're using to draw, you should not cut the body. For example, if I'm to draw from up here, I'm just going to draw a slab using the wicks, but I am not going to cut the candlestick body. What I'm trying to mean is, just look here, I'm not cutting the body. The body of the candlestick should not be cut, right? So that is the first one. Now, another turning point, when the market came and turned from here, remember in downtrend, we are marking lows. So it gave us a turning point here, right? Just see how we draw it correctly. You should not cut the candle. This is the turning point we're using. So why someone may ask, but why is it passing through this candle? It's because the market broke below this turning point here. So we expect the retest. When there's a break of support here, it was support. When there's a break of support, we expect it to become resistance and just be tested. Then again, the market turned from down here. Let's draw a slab. Guys, remember, do not cut the candlestick body from the point you're drawing. Now I'm drawing it depending on this turning point. So I am not going to, I'm not going to cut the candlestick body here. And you can clearly see I'm drawing through the wicks. And the market came and broke this level and it became resistance. Just from the definition, remember, if this is your current price here, this will be your resistance, this will be your support, right? And the moment support is broken, remember we said it becomes your new resistance. Why? Because your price, the current price is below this level here, right? So it becomes resistance and you have to find a new support down, right? So let's just continue with our drawing of the slabs. So we again had a turning point here, which you can mark like this, right? This one here. Do not cut the candlestick on the point that you're using. Just use the wicks. For example, here I've just drawn using this wick of these candles here. Do not cut the candlestick body. Now let's draw. Let's continue. Again, we had a turning point here. So we're marking the lows only since we're in a downtrend. You can clearly see how the market broke down and came to retest it. Then again, we made a low. So we are marking this turning point here. Do not cut through the candlestick body. And you can clearly see the market broke down, retested it, then went up. Now again, let's mark this low here. You can clearly see that the market again broke down and retested it. Now we again broke up. Let me just see this here. Let me just increase the size and you can see here. When we broke up, the market came back and tested. Someone may say that I'm not seeing. When we broke up here, you're seeing this? The market came and tested this area. Now we're into this area here, but the market has failed. Has not yet failed because the day is still on, because this is a daily candle, the day is still on. So we want to see how the day is going to close. The moment the day closes below here, it will mean that it failed to break out, right? It will make this a false breakout. And after a false breakout, we shall expect a retest of this area, and then we come back to this. Now, in this case, this is the current market price. The price is moving right now. In this case, right now where we are here, this is our current price. And this is our resistance. This is our support. So if I'm to trade, I don't need all this level. I don't need this level. I don't need this level. I just need this one here. And I need this level here, right? Not to complicate our trading. Now, when we break below this one here, this will become my resistance. And my next support will be this low here that we are drawn, right? Of course, we shall also have a minor turning point here, but the major one will be this one here. Are we together? So this, we have drawn this in big time frame, but let's also see how about in smaller time frames, right? How about in smaller time frame? Let me just remove these drawings. This one we have drawn it in there. Now let's assume that you want to take your entries like in H1. Let me just go to H1. Let's assume that you'd like to take your entries in H1, or you've already taken your entries. Maybe you would like to add more entries and all that. So I'm not going to go so far. Let's start with this movement up. This movement up here, we mark the higher highs, and then we shall see how this movement down reacted to these turning points here. Guys, if you have any question, please do not hesitate to ask. If you have any question, do not hesitate to ask. All of them will be answered. So starting from here, the market had this turning point here, right? It made this low and it was a turning point, and the market failed to break it. Now, when the market failed to break it, it also had the high here, this high, right? Remember in an uptrend, we're marking highs. Now, this high also was holding price. Where was it holding price from? Just look here. The market made this low, came and turned from here, then came back to this low here, but failed to take it out. Then also came here, still failed. It came back down. And then finally price broke above and retested. Now just look at this. When price is here, this is current price. This is your support, this is your resistance. The moment the resistance is broken, it becomes your support. Let me just clear this. The moment this resistance is broken, it's no longer resistance, it turns into support. So the market comes into support, we are looking for buying opportunities, and then we continue up. Then again, the market created for you this turning point here. You can use the highest, but I would prefer the immediate that was created. The market created this turning point here, right? This high. Remember, in an uptrend, we're marking highs, right? So the market created this high and also created this high here. Let's mark all our highs, and then we see how price reacts to them. Now, just look at this. The market broke above here, created this high, created the higher low, higher high, higher low, came and tested this level here. Remember, after a breakout, we expect to test that level that has been broken out. Now we broke here, we came tested here. The market tried to create a high, but it failed and came back below. And then remember, I told you that we expect a retest of that area, which the market did. Now the market has started making lower lows, right? So I'm just going to leave these levels, and you see that you don't need, the reason why I'm saying that you do not need to draw all these things that to mark all the odd levels. You don't need to mark odd levels, you just need the immediate ones, because the odd levels are reacting on a previous turning point, meaning that also again, when a new price reaches to that same point, it's going to react. So there's no point of going back to mark all turning points. I'm just going to leave these ones here for learning purposes, and you'll see. So now the market made this low here. We mark our low, right? Let me just change the colors now to red, right? To red. Now the market broke here and was held by this previous turning point. Are you now seeing? Now, since price is here, this becomes your support, this is your resistance. Because we have broken this support, now support broken becomes resistance, and this becomes your support, right? Now we had to retest resistance. Then again, we broke. Just see how the market is respecting these turning points here, right? Again, let me just extend this, right? Old here, let me just extend it. It is simply market reacting to the old price, but I will not need it, right? It will become, if you want, you can just extend it. Let me also extend this. Let me just extend this to show you where price is right now. When price closes below here, it will become your resistance. But before we go there, just want to show you that even if I don't use this old turning points here, I don't extend this. Already the market reacted to this level here. And let me just draw for you a low point, a turning point. The market created this lower low here. So I could have just drawn this lower low, and the market broke below, retested it, and again created another lower low, right? In a downtrend, remember we mark lower lows, and you can clearly see how the market is creating them. You can clearly see how the market is creating them and retesting them. I see. The market broke below and we have retested. The retest is here. The market broke down and retested. So this is how we draw or mark our support and resistance levels, or what we call demand and supply areas, right? The only difference is the one I've drawn in H1, remember this is in H1, is for entry. And then the one we drew in daily is for area of interest, because those are, we're just making analysis to know that at resistance, I'm supposed to be selling. So there's some, if I'm supposed to be selling, what aspects or what reasons do I look for before I take my sell? Or if I'm at support in a bigger time frame and has hit my support levels, what rules do I follow, or what do I look out for while identifying change of trend so that I can take my trade? Remember, we do not take trades in bigger time frames, we take them in smaller time frames, right? So these levels that we're marking in smaller time frames give us the areas of entry. Now let's just try to do a practical example of what I'm talking about. Let's first do a whole analysis and then we see, right? Using both of them. Now let's first start from daily. So I'm going to first mark my major levels in daily, right? So let's start with the example of this level here. I'm just going to mark it. The major levels are going to be in red here. So when the price reaches this area here, I'll be looking for, in this area here, I'll be looking for selling opportunities. Let me also mark my my immediate turning point that the price broke. So it means that today I'm playing between this is my resistance. Let me just mark it. This will be my resistance. This will be my support. I'm playing between this level here, right? If the day closes here, I'll just expect a retest and then I continue down, right? But remember that price came and hit this level. It's our previous support levels, meaning it has turned into resistance. And what are we looking for at resistance? We're looking for selling opportunities. But you're not going to see it in the daily time frame. Where are you going to see it from? Your entry time frames. Now, you need to have your time frames that you use to do analysis from, and then also you take entries. And if you're doing analysis from daily, I advise you take your entries from H1 and below. So now let's go to H1, and then we see how we would have dealt with this situation, right? So here the market reached this level here. Let me just, the market came, this is our resistance levels. This is the major resistance level. I'm not going to remove it just to show you what you would have done, how you'd have dealt with this situation. Now, for example, I want to take this cell. I will know that this is my major area. And in the major area, which we got from the daily time frame, we're not going to, it's just telling us that in this area here, look for reasons to take a sell. Now let's try to look for reasons that we're going to use to take a sell. Let's assume I'm a trend line trader. I am going to take out my trend line and draw it like this, right? I'm assuming I'm a trend line trader. And then remember also, we said we mark turning points in lower time frames. Now, I've known that I am in my area of interest, which I got from the big time frame. So I'm just going to delete this. Now I'm going to use my entry time frame. So the first turning point was this one here in H1. Let me just make it green. Remember, you're not supposed to cut the candlestick body. I'll just turn it to blue. So the market broke here. And then also, we expect the retest of this previous lower point that the market created. Of course, the market came and created a turning point here. So you could have just marked it like this. It's confluencing with this previous turning point, the high, right? So the market came, broke down, and then we expect the retest. But it's very dangerous to take a trade here. Let me just remove this for you so that you can see what I'm talking about. Now, when the price broke this level here, remember this is also a trend line. And remember we said trend line is also a support. It can be a support or resistance, but we're going to talk about them. Don't mind if you don't understand trend lines. So this is acting as your support. When they reach support, remember we've broken a support level. Which support level have we broken? This area here, right? So we expect after break to retest that level. It was support, now it has become resistance. So let's try to play it. You can clearly see the market came and retested, right? It came and retested, but it's very dangerous to take your sell at this level here because you're having a diagonal support level here. So what do we want? We want the market to break the support level here that is holding price, right? Now, when we break it, we shall just want the market to give us a retest before we can take our trade to this area here. Remember, we shall be targeting, you just put your stop loss above your resistance levels or structure. So this is a risk to reward ratio of 1 to 2, right? So let's see how it will play out. Let's see how it will play out. Let's see how it will play out. Now, you can clearly see that the market, you can clearly see that the market came back and gave us a retest at this point here where it broke. Why is it giving us a retest here? Because it was a previous turning point. Are we together? It came, retested this area, and then pushed down, right? So this is where currently the price is. And if someone had taken this trade like this, it would be running in profits, right? This is how we use support and resistance and how we draw them correctly, guys. It's not hard. Do not look for all turning points. It will become difficult for you, and your charts will be dirty. When your charts are dirty, you will fail to take decisions, right? Imagine I'm looking for all turning points. There's a turning point here, this one didn't reach, this one didn't reach, right? So you'll be confused. Where should I put my turning point? Where should I put my resistance? Where should I put my support and all that? And sometimes even they will be so close. For example, if you're looking for very many old turning points, they will be so close that you'll fail to know that, should I use this one or should I use this one? Should I use this one or should I use this one, right? So the first thing you do is, let's just do a recap. The first thing you do is when you open your charts, start with drawing from analysis timeframes. So that you know, I am here in a major. Then since I've reached a major support or resistance, what am I supposed to do there? If I'm at a resistance, I'm supposed to be looking for selling opportunities. If I am at support, I'm supposed to be looking at buying opportunities. And then you bring out the rules that you look out for before taking the trade, either buy or sell. You must have rules before taking trades, right? So I hope you guys found value in this video. And in case you did find value, do not forget to share and like. And if you just come across the channel, you're new, do not forget to click that subscribe button. Have a great day.